Welcome back to the Own It podcast. My name's Dion, and in today's episode, I'm very excited. We're actually going to be talking about something that a lot of people do not know about. I'd be surprised if people listening to this would know about it. We're talking about deposit bonds, and I have Tash here. Hi, Tash. How are you?
Hi, Dion. I'm well.
That's
How are
good.
you?
I'm very good. I'm very excited. We've got a couple of questions here. Today's podcast, it's just about educating people, telling them this is an option. Because I think that's the thing. Like, people don't realize that there's this whole other option out there. No one talks about it. People are very reluctant to talk about it. We'll get into that shortly. But let's start with the basics. What's a deposit bond? What does it actually do? How can it help? You're the expert. I'll let you take it away.
Okay, so I always like to think of it like this. When you go to a hotel, the first thing they do is imprint your credit card before they give you a room key, right? And that really is a promise that when you check out, you'll pay your room service fee.
The balance of your bill. Yep.
You'll pay your room rate fee. You might not pay that bill from your credit card, but it allows them a confidence, a surety that you will. If you decide to catch an earlier flight, for example, and you're out.
You disappear.
Or you do damage to the room, they'll charge the credit card.
Yeah.
Visa will send them the money and then Visa will pursue you. So a deposit bond works exactly the same way. It's a promise to the vendor or a placeholder that I'm going to give you this digital certificate today to give you comfort. It's actually 100% guaranteed that at settlement, I'm going to pay 100% instead of today 10% and settlement 90%.
Because that's what we're so used to seeing. Like, we bought an auction today, 10% goes down, like they take the transaction on the day.
That's right.
And that money just sits in an agent's trust account, right? So it actually doesn't go straight to the vendors unless the Section 27 is released, and, that's obviously
it could still take 28 days.
Well, that's exactly right. And that's if they request it straight away and it doesn't get denied and all of that. But I think there's this big fear of deposit bonds because of the lack of education, of not knowing what it actually is. And we're so used to putting money down straight away on like any other purchase. Sometimes you put the money down straight away. But then you think about it and you go, actually, no, you're right. When we went to New York, we went to heaps of hotels and we put down a card at the start and said, that's our commitment to pay for our time when we're here. Right. So it's really the same thing, just at, I guess, bigger amount of money. So
exactly right. So what it does though is to answer your second question, it frees up or it makes the opportunity available. So it makes more vendors available, if you like, who otherwise may not be prepared. But it also allows, so it's an instrument. And when I say that, a really good example, so I'm sitting in my living room and across the road, a house comes up for sale and I'm like, oh, I don't have $100,000 to give a deposit. I might be able to negotiate 50% deposit, 5% deposit, but I still don't have $50,000 sitting around. I can organise a deposit bond within 24 hours. Sometimes they can be done on a Friday afternoon at 4:00 and be ready for an auction the next morning. So, in an hour.
Yeah. Not that any buyers listening to this should do that at the 11th hour.
That.
But,
what it is, like if you went to your broker, like I was a broker for 10 years, you go to your broker and say, hi, I want to buy a house across the road. It's like, forget it. It's not going to happen.
Yeah.
And sometimes it's the perfect property and you've missed out. And so what the bond does is allows you to take the property off the market and get your affairs in order.
Yeah. Well, the next question is who would use it? But we had a client and the deal almost fell over because the agent wasn't really familiar with what a deposit bond was. And the example here was that they'd owned their house for 40 years, looking to downsize, typical downsizer, asset rich, cash poor, didn't have cash in the bank, went to go purchase the property but don't have cash in hand to pay a deposit because it's in their house that they need to sell.
That's right.
And we tried to do a deal with a deposit bond and the agent was so reluctant to kind of even consider it. And then we had to faff around for a week because they didn't want to take a deposit bond and try and get cash from all these different people they knew. And
it's uncomfortable for them.
Yeah, it is. They haven't asked family for money, and they're good for it.
That's right.
But it's just overcomplicates it.
And you've nailed it right. They're good for it. And so that's what happens in the back end. There's an assessment process and there's an accredited assessor who looks at it and says, will there be funds at the end? So the truth of the matter is, if someone's coming with a deposit bond, they're a fair income buyer. They've been checked, they're assessed, they're ready to go.
Yeah.
It's almost as good as a pre-approval. In fact, some brokers will set up the pre-approval and the deposit bond approval at the same time.
Yeah. Well, in fact, I think the concern that vendors think is that they're taking the risk.
They're not.
It's like the vendors aren't taking the risk. Yeah.
No, there's no risk.
It's the guarantor that's
Actually,
taking the
less
risk. Yeah.
To have someone who's been assessed
Yep.
and is good for it. Like, these people are in the market. They know exactly how much they're allowed to spend, and they know that and an independent body or group has assessed them and said, they're good. They're a deal.
So, I mean, obviously it's like it could be downsizers that are cash poor, or potentially, as you said, like you're at home, you see a forthcoming auction sign go up across the road. Yes. I mean, is it just those people this is exclusive to, or like who's the right person for something like this?
Yeah, it's actually a really interesting question. It's a really comprehensive tool. So I like to think of it like this. If you're a first home buyer and you're doing what's called a family pledge, you might do a limited guarantee against your parents' home, which would be, 20% usually. And then the question is, so mum and dad are happy to put their house up, but who's putting the deposit up?
Yeah.
So in that instance, a deposit bond would be a perfect solution, and it sort of cleans up the lending in the background as well, because when you do a family pledge, you end up with two splits on your loans. You've got a small loan for the 20%, and then you'll have a bigger one when you buy the property. And this way, when you just buy with the bond, you just have one loan, and so there's less confusion.
Yeah.
So first home buyers. The second one is or family pledge. The second one is if there's an inheritance that's available to you and it's past probate, your portion of the inheritance we can use as a bond surety.
Yeah.
Really we're looking at equity.
Yeah.
We're saying, is there equity here? We're not looking at equity minus a certain percentage like the bank does. We're just saying property's worth $1 million. There's $600,000 worth of mortgage, therefore there's $400,000 worth of equity. That's it.
Yeah.
Another one that I particularly like, or the other one is separation. So couple want to separate and someone wants to move on more quickly. Once the house has got consent orders, you can go ahead and get a bond on that, on the ex-marital home. And the one I especially like is self-managed super fund. So I was an advisor for nearly 8 years, 9 years, I'm not exactly sure, a financial advisor, and I specialised in self-managed super funds.
Yeah.
And so one of the things that happens is you set up the fund and then you ask your industry super funds to roll over, depending on what your advice is. This is not advice.
Yeah, not financial advice.
This is not financial advice. But what happens is the industry funds sometimes take time and they'll say the form's not right and the form's not right and this can go on for months.
Yeah.
And it's not meant to, but it can. And it delays the process. You've got a pre-approval in place because the bank will take the industry super fund balances as given. We know it has to come into the self-managed super fund. You can't spend it, so we'll use it as part of your funding. Yeah. And now your pre-approval's ticking over. It's only valid for 3 months. Your money's not in, so you can't make the deposit.
Yeah.
So you would use a deposit bond.
It's another option. I think that's really like the point of today's podcast is letting people know there is other alternatives other than waiting or overcomplicating it. And we're not saying
making everyone do extra work.
Yeah, correct. 100%.
Yeah.
It's not like never use your actual cash. It's, hey, you should be aware there's this option.
That's right. To get you out of a bind.
Yeah, correct. 100%. So obviously, like my experience always has been in private sale, but can you use it for auctions as well? Like how does it work? Is it everything?
Yeah.
Yeah. You just got to get them to agree to it beforehand.
So you would have a home seeker. So same as you get a pre-approval, you'd get a seeker for a bond. Mm-hmm. And then when you get to the auction, you might go to 10 auctions. It's valid for 6 months. You have paid for it.
Yeah.
Once you are successful at the auction, you sign, and then there's a link on your phone.
Mm-hmm.
You fill that in, the amount, and it sends a copy of the digital bond to yourself and to your legal representative.
Sounds pretty easy. It's not too bad. So I guess like what's the catch? Like what do buyers need to qualify for like a deposit bond? Like what?
Great question.
Yeah.
So you need equity usually
Mhm.
or cash of some description. So it could be a term deposit or the money's in shares, but I don't want the money's overseas was something that we.
That's a common one I get.
Yeah.
Or money's tied up in a long-term saving account. Yep.
And I don't
Those
want
sorts of
to break
things.
it.
Yep.
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 So it's an immediate solution. One of the times that I would always recommend looking at getting a bond is when you're doing, so we're talking about short-term bonds mostly at the moment. So that's less than 6 months. But a long-term bond can actually go for 5.5 years.
Wow. Okay.
And so if you're buying something off the plan in a development, if you say you pay $1.2 million for a very fancy apartment off the plan,
Yep.
you would then give the developer $120,000. But if you kept that $120,000 in your offset account at 6% interest, say.
Yeah. Again, not financial advice, but this is a great option. Yep.
And the bond fee is 3% on a long-term bond. You've saved some money.
Spot on.
A lot.
Yeah.
$10,800.
Yeah. And it's the other thing as well. It's like, and if it drags out longer and settlement's postponed.
That's right.
Again, it's just not having your money sit in someone else's account. It's in yours. I mean, or you don't have that money anyway and you don't have to stress about it, anything happens. Like it's all sorted. It's out of your hands. You don't have to worry about it. So, I mean, obviously we're talking about, long-term, short-term. I mean, how long do bonds last for? I mean, is there a time limit for them? Yeah.
So usually a short-term bond's usually 6 months. And the reason for that is because most settlements happen, 30 days, 60, 90, even 120 days. And if settlement's delayed, you still have a bit of time because once the bond is live, it's live. You can't refund it. You can't change it. That's it. It's live. For a long-term bond, 5.5 years is the most, and it's always to the sunset date on a build.
Okay.
And that really, for me, the most attractive thing about that is I'm not handing over cash to the developer. I don't know if that business is going to be operating in 3 years.
Yeah.
So I get to protect my money to a certain extent, which I think, shouldn't be ignored.
So what's the costs associated then? Because obviously it's not free. Otherwise, everyone would be using it. What sort of costs is the average buyer looking at? It doesn't obviously have to be exactly to the number, but...
Yeah, so I think for a short-term bond's around 1.5%, 1.5% of the bond amount, which is never more than 10%, could be 8%. You could give the real estate agent 2% so that they're happy and you 8% in the rest of the bond. Or in a long-term bond, 3%.
Okay.
Because there's more risk.
Yeah, and as you said, if that balances out the numbers as well...
Oh, easily it does.
Yeah.
On your head.
Are there any specific situations where like a deposit bond makes a lot more sense than just a regular
that
deposit?
long-term off the plan?
Yeah.
Absolutely. Any day of the week, you just would never do it any other way.
Yeah. Well, what's to finish? It's been great, by the way. I feel like I've even learnt heaps as well. To finish, what's one common sort of misunderstanding about deposit bonds that like you'd love to clear up? You've got a chance to kind of bust some myths that I'm sure are out there.
Yeah. Oh, look, I've wondered about this. I think that it's not safe. Like it's actually safe as safe as cash, but it supplements that immediate requirement for the cash. And I think often real estate agents say, oh, well, it's, it's not cash. And for them it isn't because it's, Section 27.
Is when they get paid. Yep.
That's when they get paid. And that's often why they don't want to talk about using them, although they might discourage people to use them.
Yeah.
But as a vendor, if someone comes to me and says, I've got a bond, I know that's a fair income buyer.
Yeah, the buyer's has been vetted. Yeah.
And I'm getting my money at settlement.
Yeah.
And as a purchaser, it just provides so many solutions for me. And, incidentally, if the purchaser doesn't show up, so we actually had a situation where a woman bought a $2.5 million property, signed the contracts, went ahead, organised in conveyancing and in inspections and everything, and then just didn't pay anybody.
Yeah. Disappeared.
Yeah.
So what happens there? I'm curious now. Yeah.
In 2 days, the bond gets paid.
Wow.
to the vendor.
So it does. It obviously happens, but there's
Happens.
proof, obviously, that you're safe as a vendor.
You get paid in 2 days.
Yeah.
No issues.
Yeah.
It's 100% guaranteed.
I feel like what I've learned during the last 10 or 15 minutes, however long this has gone for, is that there's because some of the biggest pushback I get, obviously I deal with buyers heaps, is like, oh, we'd love to have done that, but we weren't ready. I hear like we weren't ready a lot.
Shame.
And it's like, well, actually you might not be ready, but there's other options to put you in a position where you might be ready, if that makes sense. And then you've got time. You're buying, what you're doing, you're paying, let's say like 3% or a little bit less to get a deposit bond.
Or 1.5.
1.5%.
Most of your example.
Yeah, to put yourself in a position where you don't miss out.
That's right.
And I think that just makes sense. That's my opinion.
Well, you might pay, months more in rent or mortgage, whatever it is your circumstances are. And the vendor missed out because you weren't ready, and had everyone had this conversation, you could all get your dreams fulfilled.
Yeah, goodbye, your dream home. Tash, thank you. I hope everyone's learned something. I definitely have learned heaps. Really appreciate you coming on and taking time out of your day, especially on a weekend, to explain more about what deposit bonds are. And if anyone is interested, if anyone wants to know more about this or speak with Tash, reach out. We would love to put you in touch and help you out. Thank you so much, and we'll see you next week.